Alright, ladies and gentlemen, in today's video we're going to be showing you guys the new Market Maker X model that I've been using, and I'm going to use this for 2024, and basically that's what I'm going to be showing you guys today. And I'm going to just give everything in detail right now because the Market Maker X model is one of the best, if not the best model to trade using ICT concepts. So in today's video I'll show you that, how I redefine my model and how I use it to my liking. I'm going to give some credit, I did find some inspiration, some little pieces from Strange ICT, I won't lie, just how he breaks it down. I think that's one of the best ways, in my opinion, from like a top-down approach. I've always been doing a top-down, but framed the trade from like bias to confirmation to entry. I think I got a lot of inspiration from that, so I just want to give him that credit, But other than that, everything else is pretty much basic procedures. So I'm going to look for basically, a weekly / daily narrative for me. That's what I call it. And then eventually the 4-hour / the 1-hour confirmation from that narrative PD array, and then 15 minutes to the 5-minute entry, and then eventually we are time frame pairing. So basically, if we find PD array on the weekly, we drop down to the 4-hour, and then we drop down to the 15-minute, or if we find one on the daily, go to the 1-hour and then the 5-minute. It's simple as that. I don't overcomplicate it, and I usually skip the time frame that isn't necessary or needed. I just get straight to the point, and I look for certain PD arrays to have a market structure shift or a change in the state of delivery from the previous PD array, or the higher time frame one. And then eventually after that, I pretty much have the 3 PD array rule. So basically just to align with the order flow basically. So I want to be on the right side of the market. I don't want to be on the wrong side. So if 3 PD arrays get broken through, I usually just get out of the market, or I cut a break even, or I just cut it, where I'm at, I just stay there and I go to the sidelines as soon as I see 3 PD arrays broken. And then eventually I use time elements. I use the silver bullet, the macros, and then the sessions / kill zones. And I think this is pretty basic. I think everybody needs to use time elements. I think time elements are important. And then eventually after that, that's all I really do. I'm gonna go and show you guys everything now, and we're just gonna show you guys the trade ideas using this model right here. So we're gonna drop down on the charts and show you in the candles. I'm gonna show you guys how I find it. So yeah, that's pretty much it. All right, so here's the example. We have a buy side imbalance with clear draw on liquidity up there, which is buy side liquidity. This is buy side liquidity is resting up there. We're going to want to come back down into the buy side imbalance. So we're going to wait for that on the next couple of candles. And you see this is kind of a down close candle, the order block, but I would prefer, this is my first PD array, it's my second one, and then this right here would be my third one, this buy side imbalance down here. If we ever get back down there, you see we tapped up into it. Perfect. So whenever we tap into like a higher time frame PD array like this, you drop down into the other time frame. So as soon as I see the daily, I time frame pair, go to the 1 hour. So that's what we're gonna do now. And our draw on liquidity, again, don't get it mixed up, is the buy side liquidity up there. So we draw down to the 1 hour, and again here, we're gonna look for a market maker buy model because we're bullish on the higher time frame, we're bullish on the daily. Why would I be looking to go short? It doesn't make any sense. I'm gonna use time elements. So the next day, basically from eventually, the kill zone or the silver bullet, the AM silver bullet, I think it's like 8:30 to 9 or 8 to 9, the ICT created. And so we're going to look for that, or we can use a macro like 850 to 910, we're going to look for that. My first PD array would have to be this right here. It's going to be a sell sign imbalance. I'm going to want to see that changed as a inversion fair value gap, have a change in the state of delivery, like right here, change the state of delivery. That can be an inverse, it can be an order block, it can be an inverse PD array. Basically that's how I view it. It doesn't have to be just strictly inversion or a order block, and you don't always have to look for a market structure shift if you are following the higher time frame order flow. That's how I view it from my perspective. So we're going to go to 3x, and we're just going to show you guys basically. So boom, we're going to see a market maker buy model form here, and we're going to use boom. All right, again, whenever you're like trading this, you're going to want to see the higher time frame PD array bounce, make another PD array on this time frame, on the 1 hour. So you have the daily PD array. Now you're going to want to see a 1 hour PD array that is aligning with the daily one. So on the daily, we're bullish. Here, we're going to want to see a bullish PD array form. And you can see here, we have a buy side imbalance that was created. We're going to get rid of this right here, and we're going to make it a different color. We're going to make it orange, and that's pretty much what we have here. So we bounce off of this. We had to change in the state of delivery. So here, I would drop down to the 5-minute. We don't have to come back down here since we made this in an inversion fair value gap, and then we have a mitigation block here created. So like the middle of the inverse, I would take a trade, or if not, then I would just look for, again, a change in the state of delivery or market structure shift, and that's what we're going to look for here. Again, so what I would be looking for is, since we hit this 1 hour PD array and we bounce, I'm going to look for a market structure shift or a change in the state of delivery, or a PD array to give me that, confirmation of order flow, since we've bounced off of this. We already had a market structure shift. We came back. I'm going to want to see a market structure shift or a, change in the state of delivery, make these 3 down close candles, an order block. We come back down and revisit it, and then we push up higher. Boom, we come back down, we bounce off of it, and then we continue to bounce, and we hit the PD array there. Now it seems like we're forming a market make or buy model off of that 1 hour buy side imbalance with the inversion fair value gap on the 1 hour too. So you can see the bodies respected this candle, and I mean not the candle, but the inversion fair value gap pretty nicely. And eventually here, we're going to want to use time elements. You can see we're in the silver bullet from 10 to 11, and 10 to 11 is pretty much about to end. And so the next actual area what I would look for to take a trade is probably during the macro. So 11:50 through 12:10, I would probably be looking for a trade idea to form and just trying to enter around there. A change in the state of delivery right here. As soon as we close above this, we had a change in the state of delivery. We made that in order block, and now we have a market structure shift. And that is very powerful to me. I'm going to take off the little lines here. So we had a market structure shift. We had a change in the state of delivery. Now what we're going to look for is a simple retracement. And we get that now. And then we have a switch. So right here, I would take the trade idea. Main reason why is because we already closed above this right here. We respected this PD array. To me, it seems like we're just bound to go all the way up. And then eventually I would target pretty much some buy side liquidity like this high up here. And then eventually this high up here. Pretty simple and sweet. I just can't see us going back down anymore since we already redelivered into that area multiple times. I'll take the trade, and then eventually I'll just go let it run. Boom, boom, boom. Pretty simple and sweet. We take profit 1, take profit 2, and that is it. And a lot of you are gonna be asking, like, why'd you enter up here, not right here? Because again, this right here could have just came back down and rallied up. I want to see strong displacement, a breakaway gap here, showing us we're strong and bullish. And then eventually here, it's gonna align with the macro. I knew it was gonna align with the macro, and I would just take the trade there. It's pretty much close. If not, I would have probably waited for this up close candle, and just closing above here and then coming back and retesting it, probably taking the trade there. But either way, this trade idea was very valid in my opinion, since we had the market structure shift. That should have given you more confirmation. That's your first PD array. This is your second PD array, and then this is your third PD array. That's 3 PD arrays aligning with the 3 PD array rule. It's in a macro, and you had a change in the state of delivery with the market structure shift. Usually that is very powerful, confirming to you that order flow is indeed bullish, and that's what will happen here. And I'm going to show you guys a bear scenario. So this is a market maker buy model in the essence. And you can see here, this is your daily PD array, your 1 hour PD array bouncing off of the daily one, coming back down and redelivering again into it, and then eventually making a 5-minute inverse with a change in the state of delivery with the market structure shift, having those 3 PD arrays here aligned perfectly and pushing all the way up, taking on buy side. Our original target was all the way up here, and I think we already met it. Yeah, so we already met it. So pretty close, pretty sweet. Now we're going to go and show you guys on a market maker sell model. All right, guys, we have a trade idea here. Basically, we had a market structure shift. This is going to be on the weekly. Again, time frame pairing. We have our short-term previous week draw, previous week low, and then eventually we're going to be showing, whenever we tap into that doji or a vacuum block there, we're going to wait for the next. Oh, we took that out. So our next draw would be right here, waiting for the sell side imbalance to be hit. Boom, we tap into the sell side imbalance, and eventually we're going to wait for the closure of that candle. Boom, boom, boom. All right, boom. So we open up to the next candle. We're going to go to the 4-hour time frame here. Waiting for that close on that candle is very important. And you can see here, we took out buy side liquidity, took out buy side. And eventually we are still bullish to me because, we're still rallying up. We haven't had a market structure shift below this low or this low. We did have one below this low, but eventually we did take out buy side, and now we're rallying back up. We disrespected this SIBI, and we didn't, respect it as much as I wanted to. So to me, that would have, again, here we had an inverse. We didn't really drop as much as I wanted to, but I'm going to wait for that now, that confirmation. Perfect. All right. Perfect. We get to close below this. No, we don't. And now we do. I feel like this would be more of a propulsion block here, but we're still going to have our draw. That's our first PD array, change in the state of delivery. All right, that's number 2. This would be your third one now. Boom. So that would be my second PD array. One. And then this is my first one. This is my second. This is my third. Why? Because this third one aligns perfectly with this right here. So this right here is a buy side balance that became inverse now. And eventually it aligns with this big up close candle. So we're going to drop down now to the 15-minute chart, and we're going to look for something of a retracement from one of these PD arrays. We're going to be from this one right here. It can be from this big inversion fair value gap. So we're going to look for something inside of there to have another PD array form around on the 15-minute. It can be from the market structure shift. It can be from the inverse. It can be from the up close candle up there, that proportional block. So yeah, we're going to try to use time elements. I would try to enter the trade around here. And if not, then of course we can go on to the next day. It can be a rollover, rally all the way back up into here. Now we're going to wait for a change in the state of delivery or market structure shift. And by that, I mean, we make this inverse. We make this inverse and then we enter. Simple as that. And now we're going to wait for it. Boom. Make it inverse. And now we enter. It can be a big stop loss. I won't lie to you. And majority of the time it can be. And then eventually our first take profit will probably have to be here. Profit right around here. And yeah, no, I know. You might have to hold some trades if you're like more of a higher time frame person. Like the weekly right there, you know, it's going to take you a while to hold. And then eventually we have here pretty much another draw on liquidity. So that would probably be my first take profit here. Move my stop loss. And then eventually this would be my final target. And now we're just going to see how it forms. Boom, boom, boom. And you can see we're just dropping. First take profit hit. And then eventually I would have trailed my stop loss. And you might have to hold this trade overnight, man. I'm not even going to lie to you guys. Boom, we're dropping. Perfect delivery here to our objective. And, you know, we're just chopping around. Boom, boom, boom. About to retrace. Forming another market maker sell model. Another one right there. Now, we're just still inside of that. Boom. We would have got stopped out. Bunch of choppy market conditions. Would have been worth it. And then eventually, boom, the final target hit right there. So, if I'm being completely honest, this right there would have been for me a stop. But you can always re-enter in my opinion, because you have first PDA rate broken through, changing the state of delivery right there. And then eventually I think this would be a breaker block right there. That's your second PDA rate change. And then eventually you form an order block there. And then you have a big SIBI there. Even then you have one right here. So I think that's more of a breakaway gap there. So that should have just told you that would be your third PDA rate. So your first one right here, busy, second one, breaker, and then you form a SIBI. That after that you usually want to enter as soon as possible, because that's 3 PDA rates broken through, and then eventually hold to the next target, and that would be your final terminus right there. And eventually I think you did hit the market structure shift. I think this would be like more of an immediate rebalance, tap, and then you drop. Perfect delivery in my opinion. This is how you get the market maker sell model. But even then I probably would have just got out, fully right there, and took my low hanging fruit objective, basically a 0.9, and then eventually this is a 3, basically 3R. And to me, it just still would be worth it to not even, hold that trade overnight. I don't usually like holding trades, so if I'm being completely honest, I probably would have re-entered right here the next day, roll over, and just continued, I guess. But yeah, this is pretty much it. That's how I use my model. So I'm going to use it 2024. Pretty simple and sweet. If you learn how to use the model, make sure you check out the working PDA arrays video to understand how we use PDA arrays and how I use the market structure shift or the change in the state of delivery with inverse arrays. So until then, I'll catch you next time. Enjoy.